Welcome, traders. I wanted to make a quick video about probability. Basically, as a trader, we decide if we want to buy calls or if we want to buy puts. And it doesn't matter what anyone say, it's never a right or wrong answer. For me, it's about probability. You can buy a call and I can buy a put in the stock at the same time, and we both can make money off of it, all depending on the strategy that we use and the timing that we use. So I kind of want to give you an example on what I mean for is probability. A student of mine asked me if I could break down United Healthcare, stock ticker UNH, so I'm about to break it down right now. I drew a few little lines and support zones, uh, resistance zones, aka demand zones and supply zones, what I always say. So I kind of want to give you an idea how I look at it and how I break it down. So the first thing that I do, I'm on Webull right now. When I click on a stock specifically, I want to know what the stock is about. I go down to the bottom, I click profile. Here go the description, what the stock is, what it entails and everything. United Healthcare is a big company. They got a lot of things going on. I want to come down to industry. I want to see exactly, healthcare, provider and service, managed healthcare. All right, cool. Then what I do, I come up to the top. I look at my average volume, which is 3.33 million, versus my relative, aka current volume, which today it traded at 2.90, right? That lets you know how many people show up at the party, pretty much to trade this stock on and off, to buy and sell. Right now I'm looking at my candlesticks, right? So I want to start off with my daily chart. I look at my daily chart, and I want to zoom out. Notice I don't have any MA lines or nothing like that. Like when I made MA lines, if I go to indicator and I draw MA lines, basically support and resistance lines that show me everything. I just want to do pure price action, supply and demand for this example. So if you look at it, right, you look at it from a larger spectrum, you can see right here when it dropped, this was coronavirus, right? Coronavirus dropped it down. You can see it came back extra strong and it's been rolling ever since then. It's stuck in a uptrend channel. And when I say stuck, I mean that it has a specific, wave length to how it moves. It moves very specifically. And you can see from my lines that I drew, my trend lines, it comes up, it eventually bounces down, it is in the middle. You can, if you wanted to, you can actually draw another line. Let's make this like yellow so you can see. No, I ain't gonna make it yellow. Let's make it purple, right? You can see that it comes up, bounce down, comes up, bounce down. Sometimes it stays at the purple line. Not sure if it's gonna come up or come down, but it's pretty much in this channel right here, right? And you can see if I zoom in, once it got to right here, great news must have happened. Something happened because it jumped. It jumped off a high volume, right? So let me go out again. If I say the average value from this is 3.33, on this day, it was trading at 4.04. The next day, it jumped up to 10.34 million. So some great news may have came out. Not sure what the news was. That's something that you can do as a trader, to look at what the news is, whatever. But I just kind of want to make a quick point. It jumped up. It was trading higher. But you can see right here in this red rectangle, it entered into a supply zone where a lot of selling takes place. And you can look at the supply zone identified by every time it comes up in this area, it's some sort of selling going on, right? So once price jumped up, since it was a gap, gaps need to be filled eventually. These right here are untouched shares, right? So it was trading at the high of $326.44, right? And it straight jumped up at the low of $341. So all of this stuff in between, 327 up to 340 is missed opportunity. It was so much demand at the time that price skipped up, right? So eventually when price skip up or skip down, it has to come back and fill those orders in. People have to fill those orders in order for the stock to actually be a fundamental mover, shall I say. In order for it to really move correctly as it should, eventually it will come down to test levels to fill orders and then either go up or down, all depending. So you can see as I move further on, price came back down to fill those orders. All right here. This when price started coming down. Price started coming down to fill the orders. Boom. It's right here at this purple line. It's still on trend though. Went up at this purple line, went up. So from here to here, a nice uptrend, right? Because it's not falling beneath this purple line. It's staying above the purple line, right? But you can see as they hit another sell zone right here, aka supply zone, price then start to plummet and really go back down to previous support. You can see down here, previous support. Price start to come down. Now price is starting to come back up on an uptrend, right? So, two things I want to point out. At the bottom, right here, let me see if I can draw something right quick. Can I twist this any type of way? I don't think I can. Nope, can't do it. Okay, at the bottom of this line, this is our demand zone. You see whenever price comes down, it goes up. At the top, this is our supply zone. You see whenever price goes up to the top, it comes down. Right now, it's entering into another supply zone where price can possibly run down. At the same time, it's still above our resistance. It's still above our support right here at this purple line. So now you got to ask yourself probability, right? This is why I say both buyers and sellers, both people that want to buy calls, both people who want to buy puts, can actually profit from a trade like this. If I'm looking at it, me personally, I'm looking at this to possibly buy puts. Because it's looking like this stock specifically is running out of steam. You can see that each time it reached to the top of the supply level, it got shorter and shorter as far as the candlesticks that was presented. So like this first candlestick at the very top was 367.95 cents. This very top one, this one, was 367.49 cents. The very top of this one is 361.25 cents. You see it starting to slowly slump over, right? So it may be running out of steam. But not just that. Like this is the daily candle charts, whatever. I want to look at my weekly. If I look at my weekly, I want to see if that supports what I think, right? So looking at the weekly, you can see that this week is red. It looks like it still have some, some umph to go up maybe. But what's the probability of it going up versus going down? How much more money can you make from it going up than going down? What I mean by that is, at the height of this stock, right, it was $367.95. Right now it was at right now it closed at $354.60, right? So if I take 367 minus 354. 367 minus 354. $13, right? If I'm buying my car, my target is at the top somewhere. $13, right? That's for a car. But if I take the low of this right here, which is 320 minus 354, because that's where it closed at today. 354 minus 320 is $34. So which one would I be more profit, more making? Me, I'm taking the $34. Not to say that it's going to go down, but I'm saying you got to play with the odds. And the odds are I can make more money from this if it goes down than it can go up. So if I'm not sure, if I'm indecisive about it, I want to stay away from the stock altogether because I'm not sure, right? So another thing I want to point out, I like to look at it from the daily, the weekly, and my favorite thing, I like to use an aerial chart to look at it from a 5-year span and a year span. So if I look at it for 5 years, you can see that the trend of this stock has been going up for a very long time. It dipped down, but overall it's been going up. That's 5 years. 1 year. Same thing. It's been going up. It's been going up. It's at the peak. It's in the supply zone. So like I say, the probability of it getting to this number, this height, it can happen, but the probability of it going down can also happen too. So it all depends on how you want to look at it. And I showed you the math. You can make much more money if you're right buying puts on it. Click out right quick. 5 days. 5 days is just showing me all red. Let me go to 3 months. Okay, so if you look at it from a point of view of 3 months, you can see that the supply zone is in a supply zone where people start buying. You can see this clearly. That's why I like using aerial charts, because when you use an aerial chart, you can kind of get a better picture. You can get more data displayed at one time on your phone. So if you look at it like this, it's entering the supply zone and it's coming up a little short. So you gotta ask yourself, this health stock, could it be any catalyst possibly that can push it up higher than it was, back in what? Earlier this month. I'm sorry, earlier this year. This was in January. January the 7th, January the 8th was when it was at its peak. Ever in the history of the stock, it was at its peak the beginning of this year. So you ask yourself, what's the probability of anything more exciting happening to make this stock shoot up even more? You have better odds of it going down than you have going up. And even if you're right, it goes up more. The risk to reward, you are risking more buying calls on it for the simple fact, if it falls, it's more money to be made. So this is my breakdown on UNH. If you have any questions, feel free to let me know. I will surely elaborate on it.